most people value MicroStrategy as a Bitcoin holding company. But what if they've been thinking about it all wrong? Today's guest is an under-the-radar analyst with a bold thesis. MicroStrategy should be valued like an investment bank. And if he's right, the market is missing something huge. And in today's video, we're going to be going into the details of his thesis and knocking it around, explaining why few companies can follow MicroStrategy's approach and determine what it might mean for the stock's price if this thesis proves successful. I think this is eye-opening. I hope you enjoy the conversation and comment below if you think MicroStrategy is Bitcoin's first investment bank. Allard goes by Stony Chambers Asset Research on Seeking Alpha, where he's published over 92 pieces and gathered over 3,000 followers. He covers digital assets, macro, and derivatives. He's worked in crypto since mid-2022, has considered himself a Bitcoin maxi since early 2023. Allard, welcome. I want to ask you a question, which is that, you argue that MicroStrategy is Bitcoin's first and only investment bank. It closed trading at $396 on January 17th. Is it really a buy or a sell at that price?
Yeah, I think that from my perspective, I think about investing with time frame in mind. So we're looking at something that on a very long-term time frame, I think it's definitely a buy. And even on the short term too, like if I were trying to time this, I'm going with the trend and I'm not trying to call the tops or anything like that. So within the various timeframes, I'm certainly thinking that this is a buy. In the short term, you're going to have volatility, right? So who knows what's going to happen in the short term? In the long term, I see this thing going much, much higher.
Okay, long term going much, much higher. 396 is not a nosebleed section kind of thing. So your mind's going bigger, because I really want to kind of flesh out this idea of it being an investment bank and from a valuation standpoint, where that might sit. So we're going to get into that. But before we do that, I want to ask you, because you came on my radar because I read your piece on Seeking Alpha, this idea of MicroStrategy being compared to an investment bank. And I have to say, when I was reading the source material, the way it was written, it was a really nice presentation, and it felt like more of a sophisticated analysis. Can you share any more about your background? Are you coming from traditional finance? Are you more of a retail hobbyist? Is there any more you could share there for the audience and get a better sense of sort of your analysis background?
Yeah, sure. Certainly not really deeply entrenched within TradFi. I'm 24 years old. I don't really have much work experience at all. But just a little of my background educationally, I'm an economics major, very heavily concentrated and focused in finance. And I've been studying finance just on my own for the last few years. Really got into crypto, I think 3 years ago. So 2022, late 2021. And that really allowed me to kind of transfer my knowledge of corporate finance in the academic setting into analyzing crypto and then eventually Bitcoin equities. So it's not a traditional finance background in the sense that I've worked with a big bank for many years. The experience I do have is more of, I've done internships at some funds. I've helped funds build alpha models and factor models, and done a lot of financial data science related work here or there during these engagements. But right now, I work within the crypto industry, and I work for a pretty big DEX built on many different chains.
Curious, was it working on those models that brought you into the crypto space? You mentioned working on some funds, doing some internships there. Is that what kind of brought you in, or was there something else that kind of piqued your interest in the crypto arena?
Yeah, for me, I just started researching it very organically. Originally, it was my brother who started working in crypto, and that got me interested to look more into it. Obviously, if you're an economics major, within the last few years, you were probably told by your professors that crypto and Bitcoin is a scam. So the initial inclination is obviously to dismiss that outright and not really look into it. But after my brother really started working within crypto, that got me to consider it a little bit more. And, once you kind of step in and go down that rabbit hole, it just becomes this thing where more of it is unraveled, and you start to realize that within this, there is something there. And within that, Bitcoin is the true signal behind all of it.
Well, let's get into the true signal behind that. Started the interview asking this question about is MicroStrategy valued at a good price right now at $396? And I think it all ties back to this paper, this article that you wrote. So as I mentioned, you came across my radar when I was preparing for a video when it was comparing different Bitcoin assets. It was looking at Bitcoin, it was looking at the ETFs, MicroStrategy, I think a leveraged MicroStrategy product, MSTU, and then as well as digital assets. And so I came across your view, which said, maybe the market is not necessarily looking at MicroStrategy in the right way. A lot of people, when they think about MicroStrategy, and I went in to try and give a high-level explanation of what's happened with MicroStrategy, which is basically they've used their balance sheet and they've also used the debt markets to be able to get capital, to be able to buy Bitcoin and add that to their balance sheet. And so a lot of people look at it as more of a fund. You said, that may not be correct. There may be a way in which you look at this more as an investment bank. So maybe you could start there. I guess maybe start with what has been your view of MicroStrategy and how has that evolved to where it is today, the sort of notion that it's Bitcoin's first investment bank?
Sure. Yeah, I'd love to get into that. I think that's a very good story to get into. So really, like with MicroStrategy, before I even start there, you got to start with Bitcoin, right? So everybody comes into Bitcoin, and I came in not really through Bitcoin, but through the like crypto and the ETH and Solana and like smart contract way of thinking about things. And then you get into Bitcoin, you read stuff like the Bitcoin Standard, you watch obviously like Michael Saylor clips and videos and interviews, among other very informative like commentators within this space. And you start to get a sense of like what is going on within Bitcoin. And of course, you eventually find out about MicroStrategy, which is this publicly traded company that has consistently tapped the capital markets to increase the Bitcoin on their balance sheet, right? And obviously, Michael Saylor is a very charismatic and informative and knowledgeable person. He's able to really articulate these complicated concepts in digestible formats. So, like, there was something there that allowed me to, gain a footing about what's going on and then delve deeper into it. So when you look at MicroStrategy initially, again, it's a company that has, a software business that's relatively stagnant. Like not much has changed over there in the past many years. But the company separated itself from everyone else really in 2020, late 2020, when it started like going all in on this Bitcoin acquisition strategy. So that's level one, right? Level one is MicroStrategy is this Bitcoin proxy. It's a publicly traded equity that is basically chock full of Bitcoin on the balance sheet. Therefore, it is a Bitcoin proxy. So those who cannot buy like other Bitcoin proxies due to various reasons, but they can buy stocks, meaning like equities in individual companies, they would have to invest in either MicroStrategy or Bitcoin miners if they want that Bitcoin exposure. So that's level one for understanding what MicroStrategy is. And level one has certain implications that really like cap the valuation of MicroStrategy. Because if you think about it as it is simply a Bitcoin substitute, and therefore it is just worth the Bitcoin on its balance sheet, if you take that perspective, then you're looking at this company should not trade at more than its assets, its Bitcoin, minus whatever outstanding debt it has, right? Like that would be level one.
Is that, just to clarify, is that really the sort of the NAV model that many people will talk about how they want to look at MicroStrategy?
Yes, absolutely.
Okay.
That would be the NAV model, or MNAV, or I think MNAV means like multiple of NAV. So like we're talking about a 1x MNAV model, right? So if you think about it as, hey, this is no more than a Bitcoin proxy, you have like the simple version, level one of that would be, okay, this should be trading at about 1x MNAV plus whatever valuation the software business is, right? So like whatever you arrive at, like software business, and then you add that to the amount of Bitcoin, subtract the outstanding debt, there's the value of the company. And I would say most analysts on the market, like most investment analysts, period, they don't even get to level one. Because like, no, it's true, because like they look at it and they're like my econ and finance professors. They're like, Bitcoin's a scam. So this thing isn't even worth considering. So you don't even get to level one, right? And that's why I started with like That's why I started not even with MicroStrategy. I started this story with Bitcoin, because you first have to understand Bitcoin to really get on board with a company that is going all in on buying Bitcoin.
So to kind of cap where this is, you get interested. Your brother brings you into the area. You're kind of on the periphery, looking at smart contracts, Ethereum, Solana. Then you start to get more into the Bitcoin ecosystem. That gives you the opportunity to have a fresh perspective that maybe the rest of the market doesn't have on how to think about MicroStrategy. And at that point, you're able to get to this level one kind of viewpoint of saying, hey, maybe you can value it by the assets under management. How do you then get to level two? And maybe it's level three. I'm not sure what the idea of the investment bank comes from, but where do you go from there?
No, we're taking like steps at a time to get up there. So once you get to, hey, this is a Bitcoin proxy, the next thing really is realizing that Bitcoin per share has gone up over time. And not only has it gone up, it's gone up in a very sustainable way. Okay. So if a company is like just taking out the worst kinds of loans imaginable, and they're trying to buy Bitcoin, and they're buying the tops, and these loans are like margin callable, right? You could do substantial NAV destruction to the balance sheet. So that would be a bad way to accumulate Bitcoin. MicroStrategy is doing it in a very sustainable way. It's taking out loans that are extremely sustainable. There's no like margin call feature to it. And it's also like arbitraging the premium of this share price over its Bitcoin holdings. And that arbitrage creates like one mechanism for Bitcoin per share increasing over time. And we should go more into that as well. So really, when a company arbitrages the premium over its Bitcoin NAV, when a company does that, what it's actually doing is it's transmuting its earnings per share potential into Bitcoin per share. That's economically what is going on under the hood when a company issues equity to buy Bitcoin. So when a company issues debt to buy Bitcoin, it's using the capital markets in a different way. But the point is that the observation here is MicroStrategy uses the capital markets in a very efficient way that allows Bitcoin per share to go up over time sustainably. So you had a question there. I'll pause.
Yeah, no, I like that explanation. I guess you talk about arbitrage. Can you just unpack that a little bit further? Because there's a lot of terminology. There's a lot of different ways you can think about arbitrage. What I'm taking from what you're saying is that they are able to. Well, actually, I'm going to let you explain that because I want to make sure we get that right for the audience.
Yeah, sure. Like right now, we can say it has about a $400 share price, and MNAV is about 2x, right? So for every $400 in shares that you have, you really have $200 of Bitcoin. So the level one people look at that and they're like, well, this company's like 100% overvalued. It should correct 50% and be valued at the value of its Bitcoin, right? That's the level one thinking. Yep. Now, the premium is obviously everything in excess of the $200 worth of Bitcoin, right? So you have $400 worth of shares. That equates to $200 worth of Bitcoin. So 400 minus 200, that number is the premium. Arbitraging that premium means issuing equity, selling shares at $400 in order to then buy $400 worth of Bitcoin off the market. And when you do that, you're effectively selling like 50 cents worth of Bitcoin for like $1 worth of dollars. And then you take that extra money, you pile it back into Bitcoin. And that arbitrage is captured within an increase of Bitcoin per share.
Okay. I think that second explanation was, I kind of hit home on that. So I guess the glitch in the system, as some may say, is that MicroStrategy figured out a way in which to sustainably grow. I'm just repeating, I think, what you're saying, just to make sure I'm clear, to sustainably grow the Bitcoin per shares for MicroStrategy and using various capital ways to do it, either from debt or from selling shares as they appreciate in value.
Yeah, exactly. And I think like for the point specifically of arbitraging the premium of like issuing equity to buy more Bitcoin, what's going on is like we have to look at why is there a premium to begin with? Well, in MicroStrategy's case, the premium is the fact that Bitcoin per share goes up. But even before that, right? Like even before the company had any Bitcoin, the premium was within the business itself. The fact that there was a software business that generated earnings per share And of course, any asset is always valued. Any productive asset that has cash flows is always valued off of the future cash flows that it can generate. Therefore, it's valued off of its future earnings per share. So when I'm issuing more shares, what I'm doing is I'm decreasing earnings per share by increasing the amount of shares. And then I'm taking that decrease in earnings per share to then buy more Bitcoin because I'm selling those shares into the market, buying more Bitcoin, and that increases my Bitcoin per share. So imagine a spectrum where there's earnings per share on one end of the spectrum, Bitcoin per share on the other end. And a company at any time, they can transmute some of their earnings per share by dilution into Bitcoin per share by taking that dilution to buy more Bitcoin, right? So that's the dynamic that you kind of have to see in order to like start to bridge the gap into level 2.
It feels as though that's a pretty large jump for a lot of people that are used to studying traditional models and looking at earnings per share, other types of financial metrics to come up with a valuation. I mean, this feels fairly novel. I mean, have you, in your studies, have you come across any other companies that are looking to acquire gold per share or other types of assets on their balance sheet like this? Is this truly novel, the first of its kind?
Well, absolutely not, right? Like it's novel in the sense of you're doing it on Bitcoin. But if you look at like any business, really, that's how it works, right? Like you're issuing shares at the start in order to acquire like capital assets that you can then use to generate returns. Mm-hmm. Now, in the case of like Bitcoin isn't something that has cash flows necessarily, but it is a capital asset. And it is something that generates returns. And Bitcoin really does that through its absolute scarcity. But again, like if we're already on this level, we've already covered the why Bitcoin like piece of this equation.
Yeah. If you're listening to this and you have a question, that's another episode somewhere else. Yeah.
Yeah, exactly. So like we start from that premise. But like once you get there, right, you start to like it's important to realize that even for something like a REIT, a real estate investment trust, right, mm-hmm. they're going to be issuing equity often, so they can buy more buildings, and then the buildings are able to generate a return. Now, there's more analysis that goes into that, but we're talking about like really accretive dilutions and dilutions that are like value destructive, and just like purely dilution, and it ends up being something that reduces earnings per share without increasing the potential to get more earnings per share later on. So Microstrategy is doing this, it decreases its earnings per share and it increases Bitcoin per share. But the rate at which Bitcoin appreciates basically compensates for that loss in earnings per share. See what's happening? Mm-hmm. So like in that sense, you could think about the capital gains that are realized through having the Bitcoin as like this pseudo set of earnings that kind of like supplements the decrease in real accounting earnings per share. And with the FASB like rules and stuff, like those capital gains will now be recorded as like retained earnings. So, and it like kind of flows into the income statement. So like all of the like things are starting to align for like people to really realize what this strategy is doing.
And I don't know that the market, in fact, I'm fairly certain the market hasn't quite picked up on that. Although it is interesting to see, if you think of some of the disclosures, that you see some fairly heavy hitters in terms of backers buying up MicroStrategy, right? Some of the funds that have come in, they seem to have some sense of why this is valuable. Okay, so there's kind of two ways we can take this now, because you've kind of walked through really well, sort of level one, level two, and I feel like you're getting we've described how they're moving from earnings per share to Bitcoin per share. And I still think that there's another level to get more into the notion of it as an investment bank. And then there's another side of it, which is really, you could say, the controversial view of what you just said, which is really being able to call the earnings or the appreciation in Bitcoin as revenue, and how you look at the cost model. So, from your evolution and from your story perspective, what's the next part of the story that we should start with? Going further down how they're investment bank, or really focus a little bit on the sort of the revenue and cost of MicroStrategy and how that's a little bit unique to maybe how the market's looked at in the past?
Yeah, I think the next step is really to say, and there's really something that MicroStrategy has been doing, but in my opinion, like it wasn't until the middle of 2024 when they did that Q2 earnings call and came up with the metric for BTC yield. Like that was the moment where they finally started communicating accurately what they were doing, right? Because prior to that, everyone who was invested in MicroStrategy and actually looked at the company, they knew that Bitcoin per share was increasing. And that was the core reason why the MNAV had to be greater than 1. Because if I like sold you $1, but this was like a magical dollar bill that could like generate pennies over time, then that clearly isn't a dollar bill that's worth $1. It's probably going to be worth a little more than $1, i.e. its MNAV is going to be a little bit higher than 1. So like that concept of like a growth in Bitcoin per share was really what the company had been targeting for the last like 3 years, right? So ever since like probably 2021, they were looking to grow Bitcoin per share. But it wasn't until like mid 2024 in that Q2 earnings call that they really like formalized that into this key performance indicator, into the BTC yield metric, right? So I think that was a very important moment that like it just spoke to the world that, hey, look, this is what our company is actually focused on. And like it's like just get with that program. Like once you understand that that's what the focus is, now you start to have a better understanding of the company. And that's why they say like these dilutions are accretive, because it accretes Bitcoin to the shareholder by increasing Bitcoin per share. And that's just called a BTC yield for MicroStrategy. So from that.
Yeah, so I just want to ask, I mean, I think a lot of people, you think back to some of your professors, you talked about them looking at sort of this field and calling out scams, saying, oh, this is all a scam. I mean, I see similar mention of MicroStrategy. When they say a BTC yield, do you think, I mean, from your perspective, is that a fair characterization of what's going on? Was it a little bit of, using some traditional language and smuggling it in to confuse the market? How honest do you think they're being? Because I think you feel bullish on this, obviously. That's why we're talking about it today. I guess I'm just trying to play devil's advocate a little bit there. Was there a better way that they could have called it? Because is yield really the best characterization of what it is?
It's like, I understand that. And to be honest, like I don't know if it is the best characterization. I would say the other way to call it would be kind of a mouthful, right? You would have to say growth in Bitcoin per assumed diluted share. So if I like, you want to turn that into an acronym, like what do you want to do with that, right? Like so,
right.
So it's really like, why don't we just say create this KPI, and then underneath every mention of the KPI, we will have like in italics, BTC yield is not like the traditional idea of yield, right? And that's actually how the communications has been done. So I think that like, like, is it possible that they kind of snuck that language in there to nudge at an idea? Sure. Okay. But that's kind of how all communication works, right? So I kind of think like that, like, that's not really a point against the company anyway. I think they've been very transparent that it's not, it shouldn't be construed with the traditional concept of yield, which is like a cash flow that actually comes out.
Okay.
Now, that being said, right, like at the same time, what else would you call it if you have some Bitcoin and then you now have more Bitcoin? you would just call that yield, right?
Yeah.
And so it is kind of BTC yield, even in like the traditional sense of the word yield. It's just that you don't get it as like a dividend payment in the mailbox or something. So, like I see like that concept I don't really have too big of a problem about. So I mean, like, I think the next thing really is just to get us back on track. The investment bank concept, right?
Yes.
Like really, level 2 is just the idea that, hey, look, level 1 is actually wrong, because with Bitcoin per share growing, MNAV should not be at 1. It should definitely be higher. Probably like all I'm saying right now is like it's supposed to be higher. So that is really level 2, that like MNAV being at 1 is not really going to naturally occur because BTC yield is positive. So level 3, and this is where you start to like get that inclination that there is something potentially massive going on. And in level 3, a lot of things happen at once. And it kind of comes down to this, right? That if you actually look at how BTC yield is accrued. It's not just the ATM. It's not just issuing equity and arbitraging that difference between earnings per share and Bitcoin per share. But like that is an important part of it. But what's really going on is that MicroStrategy issues a bunch of different securities with a bunch of different risk and return profiles. And this is really where that investment bank realization starts to hit home. Because when we look at, so now we should take a step back and like see, okay, what exactly does an investment bank do, right? So what the business of investment banking is very simply that you have a client that wants to raise capital. So you as the investment bank, you take that client on and you then go into the capital markets and you help that client raise that capital. Now, the investors that are going to front up the capital, they're not going to like give up their money unless they can get a return and a risk profile that suits their preferences. Okay? So if I'm a client and like I want to borrow money, and the other thing is like it also has to suit the client's preferences. But in this case with MicroStrategy, you'll see why that's kind of waived. But like let's focus on the investors first, right? The investors have a certain risk and return profile. If I am a bond investor, I'm not going out into the market to buy equity. So if an investment bank comes up to me and I say, hey, I would like to sell you some equity, right? And this IPO that's about to happen. So it's just purely equity. Well, then I wouldn't go with it because that doesn't suit my personal preference in terms of what I want in an investment. And the same goes with an equity investor. They're not going for bonds. So the investment bank wouldn't go to the equity investor and say, I got some bonds, I'll sell you. So that's really what that investment bank does. It's the intermediary between the client and all the investors that are willing to front capital if and only if the security issuance meets their specific risk return preferences.
Right. It's a matchmaker, and it gets a hefty fee for making that
Absolutely.
happen.
It's a matchmaker. So what we're looking at though is in the case of MicroStrategy, that's kind of exactly what's happening, except MicroStrategy stands between the investors and Bitcoin itself. So I'm arguing that like the Bitcoin network is the client for MicroStrategy. MicroStrategy ensures that Bitcoin securities are issued into the capital markets and the corresponding like risk return profile is given to the proper sets of investors. So to a convertible bonds trader that wants convertible bonds, MicroStrategy gives them convertible bonds, takes the money, gives the money to Bitcoin. Now, how does it give the money to Bitcoin? Well, it just buys Bitcoin. And this does two things. It immediately gives the money to Bitcoin and it allows Bitcoin to like turn a profit, so to speak, because with Bitcoin, you have an absolutely scarce asset. So any kind of like inflow of money, all else being equal, it would push the price up, right? Because there's no more supply that like trickles into it. And then the second thing is it immediately gives Bitcoin to MicroStrategy's balance sheet. What does that do? That creates the BTC yield because you immediately increased the amount of Bitcoin. You also increased the amount of shares, but the amount of shares that was increased, that growth rate is lower than the amount of Bitcoin that was increased. So the total Bitcoin per share has increased. Okay. So from that perspective, you're kind of looking at BTC yield as this very important metric. Or like you could almost think about it as like the de facto earnings / revenue of the company. Like de facto, meaning that like technically from accounting perspective, it's not it. But from an economic perspective and from like looking at all things holistically, no, this is like legitimately the company's earnings when it generates a BTC yield in this manner. And what is the productive thing for society that MicroStrategy did to justify it getting this earnings? Well, what it did was it matched a specific investor and it took that investor's risk return preferences and it met it with an equal issuance of Bitcoin securities that investor can then use for his or her own purposes, right? That was the value add to this equation, and it's really pretty much the same thing that an investment bank does with a real client. So once I've said that, you now have to validate that what I'm saying. Well, I now have to like validate that what I'm saying is true, like in the sense that this is actually what has happened. And when you look down the list, right, they have a bunch of these convertible bond offerings. And just like a year ago, they had some like amounts of fixed income that were like non-convertible bonds. So you're looking at traditional bonds, you're looking at convertible bonds. Recently, they just announced that they were going to pursue preferred stock, right? So right here, you have three different groups of investors, three different risk return profiles. You also obviously have like different creative things that you could do with the covenant structures of these debts, of these debt securities that create other forms of risk return that are more like applicable for other forms of investors. So right here, you're starting to see that MicroStrategy is indeed branching out to these different kinds of investors and bringing these Bitcoin securities to the market.
It's interesting as you're describing it because there's a lot of intricacies, despite the fact that it actually sounds in some ways very simplistic, right? MicroStrategy is being a matchmaker for various risk profile buyers that want to get some exposure to the Bitcoin space, but at a risk tolerance, right? They really, what it comes down to, they don't want the volatility, right? I'm saying that, I'm stating that. I haven't actually researched all the buyers if that's really it, but they're fine getting a return without the volatility versus perhaps the equity owners that are looking for more of that volatility and potentially the upside. But it's created this sort of matchmaking environment, and being the first to do it, that's creating, I would argue, that's some confusion for many that are looking at the value of MicroStrategy. Because I think if everyone looked at it through this lens, I would imagine there'd be more demand for it, more demand for its equity. Potentially, I guess we can get into that because I definitely want you to hone in on that. But it is a very interesting, I guess, perspective on how to see it, and when you look at the functions that it's actually serving. So I guess when you came to this realization, did it feel like a light bulb went off? Did it feel like this emotion, like, oh my gosh, I finally got it?
Oh, I mean, like kind of, right? Like I like researching stocks and stuff within like the Bitcoin ecosystem. So I was, I think I definitely had this aha moment, and that like, I need to be extremely long this company because it's honestly this is kind of an unprecedented thing because with my thesis, we are straddling this transitionary period from the fiat standard into the Bitcoin standard. And so it would be foolish to think that the Bitcoin standard does not have like financial institutions, and it does not have like just financial intermediaries, right? Because like the capital markets is not an invention of the fiat standard. Right? The capital markets is the invention of the free market because people need a way to intertemporally exchange capital. Right? So I don't need to use capital right now, so I can like invest my capital, generate a return. Someone else needs to use capital right now so they can make their business, so they borrow the money from me and pay me a return. Right? That's the concept of the capital markets. Now, as long as you have money, as long as you have capital, it doesn't matter what that money is, you're going to have some kind of need for like an intermediary that helps match these things. And I see MicroStrategy as the only entity that can truly step up to fill this role within the Bitcoin economy that is coming. Okay, so if you like then adopt that perspective, like the valuation of some entity like this is just like staggering, because like think about how important the big banks are today. And the big banks aren't even a monopoly in any sense. They're not like a monopoly, but they're kind of oligopolistic because there's not many of them. But like with MicroStrategy, you're really talking about a true monopoly, right? Like this is truly going to be Bitcoin's investment bank, and then eventually like the bank/investment bank for the entire Bitcoin economy. And something like this is like, the valuation just like gets crazy because really what it's foundationally based upon is just like the inching towards hyper Bitcoinization. That's how I see this thing in like the grand scheme of things. But within like coming back to the here and now, this realization of it being an investment bank, what is the main takeaway from a valuation perspective? Well, it's the fact that every time this company raises capital and uses that capital to buy Bitcoin, that Bitcoin buy is actually revenue that accrues to the company, right? So if you then take this perspective, like every time a company buys Bitcoin, it's actually de facto revenue. Again, like you cannot call this revenue because, and according to like GAAP standards or everything, that's not revenue. That's actually like you're just making an investment. That's not considered revenue. But under this like model of how what the company actually is as an investment bank, that is revenue in the same sense that interest paid on loans that a bank makes is like revenue to a bank, right? Because what MicroStrategy is doing is just simply being this middleman, and what the middleman takes is just a cut of all of this transaction that is going on, and that cut of transactions in MicroStrategy's case is simply the BTC yield, because what goes out, what's the cost of doing this transaction is the dilution on the shares, right? So it's the assumed diluted shares, whether it's convertible debt, whether it's the at-the-market offerings, whether it's preferred stock that has a conversion feature, all of this creates assumed dilution, and that's the cost. And once you have cost, what was the revenue? Well, the revenue was the Bitcoin coming in. So revenue minus cost, that's your profit. That's now the profit of the company. BTC yield is like the earnings of the company. So, and you know, if you take that perspective, say, okay, well, the earnings have been absolutely massive, because we're talking about like, and this is exactly what Michael Saylor, like when he tweets, like we've generated 60% BTC yield at a price of $100,000 per Bitcoin. This equates to, you know, blah, blah, blah amount of dollars in earnings per share, right? Or in earnings to the company that accrues to the shareholders. Like that's all legit over there, right? Like that is like actually what is happening. Now, of course, there is the caveat that with these convertible bonds, the bonds have to actually convert, or the bonds can be, you know, recalled at favorable terms. So that is the caveat down the line, that like, you know, Bitcoin cannot just collapse and like wipe out all of the shareholder value, because that is ultimately the risk. But you know, again, you've accepted that risk. Yeah.
So I kind of want to summarize where we are and then kind of move us forward, because I do have some questions around some of the risks. I want to take some of the risks that we can take off the table, because I think they're a little bit more obvious, and get into maybe some more nuanced ones. So your model is that as an investment bank, their MicroStrategy kind of sits in a unique position, matching various buyers in the capital markets looking for different types of yield, and then being able to divide that into various risk profiles, more volatility, less volatility, and issue that either through debt or selling of the shares. And then the investment that they're making in buying the Bitcoin, it has a unique feature because it's more like an investment from a financial perspective, rather than having to put it into productive capacity like a manufacturer, which then has to produce materials at the end. It goes directly. There's no gap there. They just buy it on the market. So it's a positive flywheel effect, if you will. So that's the model. And the reason we brought you in here isn't necessarily to pick everything about apart. And that's what you're describing as a model way to understand the value there, and why it would be above looking at purely as a NAV-based model. So I think that's good. I think that's kind of where we're at in this discussion. I want to talk a little bit about maybe some risk to it. So last part I'll say before we get into the risk, you've accepted that you're looking at Bitcoin having, you know, more value in the future than it does today. And everyone's going to be on a different spectrum of what that looks like. If it's going to be more the $10 million, is it going to be $500,000? Whatever it is, it's going to be more valuable than it is today. So you're investing in that. And then you're looking at MicroStrategy as a play. And I want to get specifically into what that might look like from a portfolio perspective. But before I do that, I want to talk about 3 risks. And it may just be 2. The first is the real question of equity dilution, because I know, as you just described it, they've been able to accrue more Bitcoin per share with the way in which they've been issuing debt to date. So it's really sort of the sustainable path to continually add more Bitcoin per share, so you have that yield. And then I saw something, and I don't know when this came out, but it was a recommendation, maybe it was the last shareholder, to talk about a very substantial equity dilution. So going, and if I have my numbers here correctly, going from 33 million to 10.3 billion of Class A shares, from 5 million to 1 billion shares of second restated certificates of shares. I'm not sure how familiar you are with the specifics of the plan, if it's being proposed, if it's been approved, et cetera. In your mind, as an investor, how worried or how much diligence do you need to be doing on this equity dilution? Is this something you just accept as an investor and you trust that they're doing something, which I think is a pretty high bar to cross, or has everything that you've been able to read to date really suggest that they really are doing this and continue to do it in a sustainable manner?
Yeah, I mean, I think that's a great point that you brought up over there. So yeah, I'm well aware of that special meeting proposal. Mm-hmm. Yeah, the details were, to be clear, 330 million Class A shares, raising that to 10.33 billion Class A shares. And these are the maximum amount of authorized shares. So if there was a stock split, right, if they did another 10-for-1 stock split, like that the after split quantity of shares that is added to the max authorized shares. Okay. So like you also have to take that into account. That and I did a quick Twitter post about this. That alone isn't actually like a 33x dilution. Like they did not raise the max share count by 33x, because I think once MicroStrategy crosses $1,000 per share this time around, they're probably going to do another 10-for-1. So it's not really a 30x dilution. It's really just a 3x tops. Okay. Because you have to factor in that 10-for-1 split that's going to happen in the future. And that being said, right, at the end of the day, in order for the convertible bonds to convert, and in order for them to keep issuing more convertible bonds that will in the future convert, they're going to have to raise the maximum share count at some point. And if you look at the share counts for the massive companies, like the mega cap tech stocks, that is within the realm of share count that we're talking about for those mega cap tech stocks. So I really see this as, it's really not concerning at all. I actually would have liked them to be more aggressive with it, like raise it to like 20 billion max or something. Like I'm being like very real here. Like, look, this company is doing great things. Like at the end of the day, the performance speaks for itself. And like the outperformance definitely speaks for itself. The fact that it's outperformed basically everything else, outperformed Bitcoin and like the Mag 7 and all of that. So like it's all good. Like what they're doing is fine. But to just put it into perspective, that wasn't a 30x like dilution. Mm-hmm. It was like 3x tops after you factor in the stock splits that will inevitably happen down the line.
So your view when you compare this from a tech perspective is that this gives them sort of an open way to be able to issue more shares without really causing harm, if you will, to existing investors who, especially if there's a 10-to-1 stock split, will basically be made whole down the road through that. I noticed one thing, and I just want to clarify this. You mentioned that if you look at this compared to sort of mega tech stocks, is it appropriate to compare the stock or Class A shares to other investment banks? Or is this sort of a middle ground area because of the nature of their business, where it's more appropriate to look at it from a tech perspective rather than a bank perspective, whereas in other valuation areas, it may be more akin to looking at compared to Goldman Sachs as an example?
I mean, I don't think that really applies in this case. It's like, it would be like your middle ground that you mentioned. It's not technically an investment bank. I'm just saying that like economically it acts like one. And I'm really using investment bank for lack of a better word. Like the word that Michael Saylor uses is capital refinery. Like I like that too. I think he uses it because he can't come out and say that this is an investment bank. It would have like jeopardized. It would have possibly been like deemed as a financials company at that point, and you'd have a whole bunch of other like trouble that comes with something like that.
Yeah.
So you know what you say is like, okay, there was crude oil refineries in the past, and now we have a capital refinery for Bitcoin. Okay, cool. Like that's great. But really, what you're doing is you're chopping up risk and return the way like an investment bank would when they do to different investors or when they structure a CDO or whatever, right? So, but then going back to the point of this like quote unquote massive dilution, right? We got to put it into context. Like at the end of the day, the dilutions are a core part of the business model. Because in order to create more of these convertibles, securities offerings, you have to have eventually more shares come on the market. And the only way you can have more shares, like once you've hit the current cap, is to raise the cap. So that's fine. Comparing it with the mega cap like stocks, right? Again, like I'm just saying that once an equity reaches like that mega cap level, they usually have a lot of shares. That's all I'm saying. Like, I'm not saying like necessarily you should view this as a tech stock or something else. No, it's just that like big companies have a lot of shares. That's all. Sure.
Fair enough. All right. So I mentioned 3 risks, and I want to get into those. The next one is one that I haven't heard mentioned much, but maybe I'm just not in those circles. And I think of it as key man risk. And I actually mentioned this in the review that I did. Sort of what happens to MicroStrategy in the event something bad happens to Michael Saylor? Is the board and the management of the company sufficiently dedicated to this mission? I mean, there's been a lot of talk in the past about his outsized voting capabilities and the fact that he basically has, the ability to run the show however he wants. In this case, it's been very profitable for all those involved. But if he somehow goes away for whatever reason, heaven forbid, what happens to the company? How do you think about that at all? Is that a 0 to 1 risk? Do you say, listen, I'm not worried about that? Have you contemplated that?
I think the company has demonstrated significant success with this strategy. And also, like, all things considered, the strategy at this point is like simple to execute, right? Like you're just going into the capital markets, you're saying, I'm trying to issue this much securities at these terms, and then we're discussing these terms, right? Like there's probably standard operating procedures already in place for doing this kind of stuff. I don't see there being like a key man risk at all. I think Michael Saylor is a brilliant dude for, like, first off, catching on to the Bitcoin thesis. Like that right there, like to be someone who was at the place he was in life already, to then catch on to something that was so new, and then also be at like the age that he was, like that requires some level of brilliance and like intellectual humility and all of that.
Well, especially after he dismissed it early on, to be able to circle back. I think that I don't think he gets enough credit for that, frankly.
Yeah, I think that's a very good point. I totally agree with you on that. Yeah. But like I said, right, like he to give him all credit, right, he's a brilliant dude. The strategy as it stands right now can definitely be executed without him, right? Like if he were to, like, God forbid, if he were to pass away or whatever, or just be not involved anymore with the company, I'm not worried that they would just drop all the Bitcoin stuff. I think they would keep doing it because, one, the company has never been as successful as it has now. And 2, they really are sitting on something that is absolutely magnificent when you look at it within the grand scheme of things.
It'd be foolish to give it up, is what you're saying.
I mean, it'd be foolish to give it up. And also, and this part, like, I can only take Saylor for his word for it. He has said in many interviews in the past, the actual investors, like the big investors, excluding him, their critique of the system is like, you're not going to stop doing this, are you? Right? So if he passes away, right, or if he's not involved anymore with it, everyone else would now be like the ones who are calling the shots in terms of voting and whatever. None of them want this to stop. So I just don't see any political reason for this to stop due to a key man risk, right? So that's how I see this. But I think if something like that happened on the day it happens, the stock wouldn't respond well. But like fast forward like a few years, I think like it would be kind of like it will buff, absolutely, because the operations, it's not complicated to do. It's really not, and that's what he keeps saying about open sourcing that playbook. Everyone can do it. Although we should also talk about like why that's actually not true. Like it's not actually true that everyone can do it. But there's some nuance there. Yeah,
I want to get into that because I think that gets, so I think just to summarize, your view is like the dilution risk is low as it stands right now. It doesn't seem to be an issue from your perspective, from a value point of view. The key man risk is really, on a long-term basis, the likelihood is that MicroStrategy would continue on with its mission, maybe not with a charismatic leader at the helm, which would have its own complications, but certainly would continue to run the operations, is the most likely sort of path. And I to me, that seems likely as well. But something people should be aware of if they're looking at buying this. My last question, though, was going to be from a risk perspective. How about MicroStrategy facing competition? And this is, I think, a very fascinating question for the reasons that you just highlighted. He is talking about wanting to put his playbook out there, and for anybody to be able to do that. And I know he met with Apple, I believe, last quarter. They, of course, have decided not to look at adding Bitcoin to their balance sheet, as far as I understand. But he's talked to as many companies as he can. And I know you've tweeted about Mara maybe doing something like this, one of the miners. What is the actual challenge with a competitor coming on the scene to try and really take over? I mean, how big is the moat that MicroStrategy has at this point? Can it be conquered by a competitor?
Great. Like I definitely wanted to get into this. Let's just start from the top and then just work our way down into the nuances. At the very top of all of this is that it would be very hard now for any one entity to acquire 450,000 Bitcoin. Okay, that's the topmost line. So that basically invalidates most companies that exist. All right, like you're not going to get to 450,000 Bitcoin. Now, the first piece of nuance is that if someone tried to get to 450,000 Bitcoin, well, they would push up the price via the fact that their acquisitions would alert the market and trigger this cascade of front running. And that's going to like push up the price astronomically higher than if one person just went out and tried to buy 450,000. Okay. So when the price gets pushed up high, that does two things. First, it makes it much harder for them to like buy the next marginal unit of Bitcoin to hit that goal. It also enriches MicroStrategy, and it potentially allows the NAV, the premium to the NAV, to expand by a lot. And if it expands by a lot, then it allows MicroStrategy to issue more securities into the market and buy even more Bitcoin. So it creates this permanent moving goalpost, okay, where the goalpost is moving and the goal itself is like shrinking. Okay, so imagine that. Imagine trying to hit that kind of target. Like it just becomes extremely hard. So that's
a new game you just invented, Allard. Everyone's gonna have to go play it.
Yeah. So, but that's like number one, right? But then if we take a step back from there, like, all right, why do we even need to hit 450,000 Bitcoin? Well, it's because for this kind of game, you're talking about an absolutely scarce asset, and the ability and the fact that some people have like a treasury in this asset, and they're able to like deploy that treasury in ways that allow them to chop up the risk return profile of the Bitcoin and sell it into the market, right? That's the key thing that's going on, that this is like an investment banking operation. And in order for you to do this efficiently, you got to be a well-capitalized investment bank. So that's why we're competing in terms of who has the most Bitcoin, right? So like just to take a step back from that first thing I said, why do we even care about catching up to MicroStrategy? That's what a competitor needs to do. All right, like it needs to like be better capitalized than MicroStrategy in Bitcoin terms. Now, the next piece of nuance is the volatility profile, and this part is something that like most people don't understand too well. And like this is where I would say like even above the investment banking piece, like if that was level 3, we're now at like a level 4 way of talking about things. This is really like the actual moat that is going on. So there's actually two moats at play. There's the moat of no one's going to catch up in terms of Bitcoin number. And then their second moat is no one's going to be able to Bitcoinize their capital structure the way MicroStrategy has, right? And I'll get into Mara like later because this is a caveat to that. But no one is able to Bitcoinize their capital structure the way MicroStrategy has. Why is that? It's because if a company was small, they would potentially be able to Bitcoinize their capital structure, but they won't ever like catch up to the same amount of Bitcoin because they're small. Mm-hmm. If a company is huge, like we're talking about like Apple, or maybe NVIDIA, right? NVIDIA is the biggest company now. So let's say we talk about NVIDIA. If NVIDIA wanted to buy that much Bitcoin, maybe it could catch up over there. but it won't be like as exposed to Bitcoin as MicroStrategy is, because MicroStrategy's actual business unit, it's like software business, is so small, and everything else about it is just about like creating more volatility in the stock in order to sell that volatility in the form of securities to the market, right? So that's like kind of another way of looking at the investment banking operation. I create more volatility, I sell that volatility, and I chop up that volatility into different risk return profiles. So when you look at it from that perspective, how are you going to create that much volatility within your stock if a huge portion of your business is actually just exposed to your future cash flows from selling semiconductors?
Right.
You're not going to be able to get that much exposure to Bitcoin because you're just going to have this gigantic cash flowing thing, which by the way is a good thing, right? I'm not saying that's a bad thing, but that becomes the moat that you now have to cross if you want to get into what MicroStrategy is doing. You won't be able to easily create these Bitcoin-backed like securities that MicroStrategy can create because your equity will not have the same kind of volatility that MicroStrategy does. And if we look at the impact of that volatility, you start to see like very fascinating numbers that, like, for example, if you divide the volume of option activity by the market cap of the underlying, MicroStrategy is number one, like in the world. Like it has the most option volume per unit of market cap than any other stock. And that's a function of its volatility, how liquid its options markets are. And when options are that liquid, it allows for more expiries to be listed. It allows for more strike prices. It allows for greater like granularity for market participants to speculate and hedge on future price action, future volatility action. And most importantly, it allows these convertible bonds and convertible securities like investors to price the value of these convertible issuances. Because all convertibles have an option contract attached to it.
Yeah. I want to say, I guess, sort of my simplified version of the analysis that you just brought is that MicroStrategy, being the size that it was, having access to capital markets, but not having a extremely large and robust business unit that was doing business analytics software. That was what they were kind of known for in the financial sector. I know because I actually worked with them in the years ago. Because of their lack of success, because they were smaller, I actually positioned them to take this risk. And now that they are of the size that they are, you don't have that many other companies, right? And especially if you think about what that would take for them to be able to go to the board, like you said in the case of NVIDIA, and say, listen, we want to get rid of all the work that we're doing with all of our hardware for AI. We really just want to invest in this treasury because we think it's a better financial decision. You know that's not going to happen, right? That's just impossible to happen for the reasons. But MicroStrategy was at a very unique position in 2020 to be able to take advantage of that. And you know, then you have to ask, are there other companies that could do that today? And the answer is effectively zero, right? That have access to the capital markets in the way that they do can then run the playbook in the same way. It just doesn't exist, which is pretty interesting. So bring us back to Mara, because I know you've talked about them. Are there instances where it doesn't have to exist, but there can still be really good opportunities? And then I think just for the conversation after that, I want to get into actually talking about how investors, individuals can think about how to price this and think about value. But maybe let's kind of wrap up the competitor discussion with a little bit on Mara.
Yeah, sure. I want to say, like, before going into Mara, yeah, it's like just to reiterate that whole point about like it was in that perfect design space where it was small enough, and then it got on this train. Like, yeah, you're absolutely correct. It was just like in this perfect design space, and management was able to, and again, like Michael Saylor even admits, he didn't come into this from the beginning. Like at the beginning, it was just he wanted this way to capitalize his balance sheet, and then it eventually evolved into something. And I think he's basically on record. He said that like it was really in 2024 that they realized they could do this like capital refinery thing. Prior to that, they were simply trying to acquire more Bitcoin. But now it seems like the shift has turned more into, hey, we're going to use strategic securities issuances to acquire more Bitcoin, rather than saying, hey, okay, like if I have this much cash flow, I'm just going to like pull that cash flow forward via borrowing some money, right? Like that's where that divergence is, and where you really start jumping into like the playbook of simply acquiring Bitcoin to the playbook of issuing securities in a very like skillful way to, you know, entice the capital markets to give you money so that you can generate BTC yield. And that I think we should bring to Mara, because like with Mara, you have something very interesting going on where it is obviously the number 2 Bitcoin treasury company. It has I think like 45, almost 45,000 Bitcoin in its reserves at the time I'm speaking this. And like the number 3 is Riot, and Riot has about like 18,000. So like number 3 is kind of far away, but obviously like Mara is also quite far away from number 1, which is like literally 10 times how much Mara has. So with Mara, here's the opportunity for the Bitcoin miners, okay, and Mara specifically. With Bitcoin miners, you actually do have an equity that is extremely volatile and ultra exposed to Bitcoin, right? So MicroStrategy got there because it was a small business, and then it just levered up on Bitcoin. Bitcoin miners are like small businesses that their operating business is leveraged Bitcoin. You see? So like even if they had no HODL, even if they didn't like have any Bitcoin in their reserves, they already have like that Bitcoinized capital structure because their operating business is like a derivative of Bitcoin. When you think about a mining operation in the economic sense, what it really is like a call option on Bitcoin, where the strike price of the call option is equivalent to the cost per Bitcoin to mine for that mining operation. Okay, so like all mining operations are kind of like leveraged versions of Bitcoin with some convexity embedded into it. So like that's the equity, that's the operating business of a mining operation. What Mara has done is it's also borrowed money and used these convertible bond offerings. And at this point, the market cap is like 70% Bitcoin because of how much Bitcoin they've bought with all these convertible debt offerings. So I kind of see this opportunity for like Mara to almost like fill in as like the second biggest investment bank in a way. And I think like we got to be kind of careful here in terms of the design space, because with MicroStrategy, they're obviously doing like the bulk of these convertible bonds issuances, they're MSTR convertible bonds. With Mara, they've also done convertible bonds, and I think there's appetite for those. It just won't be as strong as like MicroStrategy, because MicroStrategy already has the options market, already has like the extremely liquid spot market. You can very easily do the delta hedging stuff to do the volatility arb on the embedded call option in the convertible bonds. With Mara, it's very similar to, there's probably just like a lower appetite to do it with that, but they can still do it. Like they can still issue convertible bonds, they can still do preferred stock, and they can still kind of do the same thing. But they also have like the auxiliary business, which is their mining operation. Okay, like, and they also have like two-pick, which is two-phase immersion and cooling. And this is you can almost think about that as like the parallel to MicroStrategy software business. Right? It's kind of unrelated to Bitcoin because they're kind of selling stuff to HPC. They're kind of selling it to like Bitcoin miners. Right now, we don't have the like official numbers of two-pick sales, but like two-picks is also this thing that Mara is doing to generate additional cash flows. And you know, eventually it could maybe turn that into something else. But right now what's going on is Mara is super leveraged to Bitcoin just by virtue of the fact that they are a Bitcoin miner. And now by virtue of the fact that they've taken out so much debt to buy more Bitcoin. So now that equity is very much like a Bitcoin equity, the way MicroStrategy has been. And because it has an options market, and because the options market is like fairly liquid, they are able to like sell these convertible securities, and the buyers of them can go into the markets and like hedge the way they want to hedge. So that creates that initial flywheel. The other thing is like Mara is also kind of like lending out their Bitcoin. A lot of people dislike this, right? I just want to be clear. Like it was like when I first saw it on Twitter, a lot of people were hating on it. They were like, "Oh, you don't know about BlockFi or something." I think that's kind of I don't think that's like a wise. I mean, I don't want to say wise, but like, I don't think that's like a fair way to look at it, because it's a difference between when retail does lending, and they're exposed to these risky counterparties. But when a corporation lends out that much Bitcoin, they're probably lending to counterparties that can definitely pay them back. Like if Bridgewater wanted to short some Bitcoin, you lend to Bridgewater, Bridgewater's going to be able to pay you back. Like they have way too much assets to like not be able to pay you back. So like you can lend to these people and generate a form of yield. So in that sense, I see Mara as like, it could kind of be the second biggest investment bank for Bitcoin, but like also do give the investor exposure to these operations that MicroStrategy doesn't do.
It's an interesting take. So, I mean, definitely a bull case for more Mara. But it sounds like, I mean, from a Mo perspective, MicroStrategy is really sitting at the strongest position possible. And if it can convince anybody to follow its script at all, it's just a win for it, because it increases the value of Bitcoin, which increases the value of its, as it calls it, its Bitcoin yield per share, right? And gives them more flexibility to then go back into the markets. So I think actually having Mara continue to improve and be even a distant second is a benefit to MicroStrategy in many ways. It's not really in direct competition, which is kind of interesting. Okay, so we've gone through a lot here today, and for the sake of keeping the conversation to kind of in the hour range, or a little bit in change, I want to wrap it up today, because I know we could cover a lot more, but I want to wrap it up today from a sort of a retail-based view of how to think about having MicroStrategy in a portfolio, right? Because there's oftentimes, you were just talking about this idea of people criticizing Mara because of this sort of model that they're taking, which is looking at like BlockFi or legacy retail lending mechanisms, and then kind of overlaying that on maybe a strategy that Mara is using. And I agree. I don't necessarily think that's fair. But bringing it back to how retail thinks about it, they need to have a sophisticated view. How much exposure? So if they're having exposure from a Bitcoin perspective in their portfolio, how do you think about the mix that you're going to have? Because I mean, you could argue in one way, listen, just have MicroStrategy, right? Just have MicroStrategy because it's going to continue to accrue more Bitcoin per share. Or you could say, listen, primarily Bitcoin spot, and then having MicroStrategy as sort of some kind of amount, because there are additional risks to MicroStrategy, right? In the event that Bitcoin goes down, you always have your Bitcoin. Yes, there's these sort of existential risks that could happen to MicroStrategy. Not everything is known. So how do you think about that from holding this in a portfolio?
Sure. Yeah, I think I'll just get the interesting stuff out of the way, okay, and then like we'll go on to kind of the boring stuff. Yeah. Like the interesting stuff is like I kind of see so I have like call options on MicroStrategy out of the money. Like their leaps, they expire in like over a year, and I see that as almost like a hedge against this like sudden rally event in Bitcoin. And who knows what the sudden rally will be caused by. Like I've talked about how like it, because of the option dynamics on IBIT and all of that, there's the possibility now for this like gamma Vanna squeeze that pushes Bitcoin exponentially higher. Others have talked about like the strategic Bitcoin reserve and how that could push things higher, and the nation state FOMO that would then cascade in. So these are all things that like are now technically on the table. And how would an investor hedge against something like that happening? I think MicroStrategy call options out of the money leaps create that asymmetric ability that serves as insurance in that kind of event, right? So I think that's one utility of it. So going a step down from call options, right? Going a step down from call options would just be the shares themselves. Now, obviously, now we're going to move into the more like boring stuff. Although it's not really fair to call it boring, but it's just like more vanilla, right? I think to start, everyone should have some kind of Bitcoin exposure, right? So even if you're like retired and you just want some income or whatever, like just think about your heirs, right? Like think about like the future after you're gone. Like it's all about having that low time preference. And then just I don't like the word diversification, but just for the sake of diversification, have some exposure, right? It just makes sense. It's an asset that is different enough from everything else that it makes sense to have some exposure. It's also an asset that's proven itself, right? That's the most important thing. So have some exposure to Bitcoin. Now, that exposure to Bitcoin now opens a lot of different possibilities, because obviously you have cold storage exposure, which I personally think is the most important. And in many ways, like, the success of the network is also predicated upon more people adopting it in like a cold storage self-custodial format. Mm-hmm. That being said, price exposure. So Bitcoin as an asset offers you many benefits. Financial is only one of them, right? The other is the self-sovereignty piece of it, where if you have cold storage Bitcoin, you have an asset that you can take with you anywhere you go, an unlimited quantity, really, of like value that can be contained within it. You can't do that with really anything else. It's only with crypto that you can get it. And within crypto, again, like I've said, it is only Bitcoin that is like truly decentralized and truly the signal within all of this. So that's why cold storage Bitcoin is important. And it creates the self-sovereignty benefit. That being said, the price benefit is what a lot of people are just focused on. Now, if you want only the price benefit, well, you can do an ETF, and the ETF is a marginable security, which means, if you like to trade a lot, or if you want to take out a loan against your securities, it is possible to have the ETF within a diversified portfolio of other stocks and ETFs and whatever. And you could like borrow against that, right? And there's stuff you can do with that. There's more optionality for you within the context of a brokerage account if you use the ETF option. And MicroStrategy, I see, like, kind of fits within that. Now, I expect MicroStrategy to outperform Bitcoin effectively forever, okay? Unless they're subject to like black swan entropy events, okay? And that is stuff like, I don't know, like the company somehow loses its private keys or something. Like that's, and I know it's not like custodied at the company, it's custody with a multitude of different custodians, but like I'm saying, what if all those custodians lose their keys or something like that, or some crazy event?
Right.
Okay, now the value is gone. Now it just disappears. So in that sense, it's like you're taking on counterparty risk with MicroStrategy. Same kind of counterparty risk we're taking on with the ETF, right? So let's just be clear on that. I expect MicroStrategy, so net of, outperform Bitcoin, because they can continue to increase Bitcoin. You could probably view that as a that you wish to have. So let's say you wish to have 10% of 10% Bitcoin exposure. Well, for that, if you want to like outperform Bitcoin within that Bitcoin exposure, you could take a chunk of that and make it MicroStrategy instead of something like IBIT or your cold storage stack, right? So this is how I kind of think about it. Like, if you want Bitcoin, which I think you should definitely like have some exposure, if you want it, then you now have to ask yourself, all right, do I want to like take on some more risk and like outperform Bitcoin within this like Bitcoin part of my portfolio? If the answer is yes, you ask yourself, how much do I want that? And it's like, okay, do I want that a lot? And if you want it a lot, then you allocate a little more to MicroStrategy than you would to like your cold storage stack or your IBIT. And if you want it very little, then you obviously allocate a little bit less, right? So that's really how I would think about it within the grand scheme of things. There's also the interesting thing about like, and this only applies if you have a bigger account. Like if you have like multiple blocks of 100 shares of MicroStrategy, you can now like sell options against it. You can sell covered calls, and like these have very fat like premiums because of the high implied volatility on the stock. It's much higher than Bitcoin. It's much higher than most other equities. So that is a possible value proposition. Like if you're into the intermittent cash flow from option selling and from mining the volatility risk premium, that's something that you can do. And you could get it with IBIT, but you get it at a much smaller quantity with IBIT. Even though even with IBIT, you get it at a higher quantity than something like TLT or SPY, right? So that's the other portion, that like you have that optionality to sell covered calls against your shares. And the covered calls have the highest premiums that you could really have within the holding that you could hold.
So I'm gonna try and summarize what I heard here. Have some exposure. You should be thinking about having some exposure. And I think if you're listening to this, most likely you already have some, or you're thinking about getting some. So definitely think about what that looks like, even if you're older. If you're looking from a just sovereign perspective and some of the other benefits that the Bitcoin network offers, you own that in your own cold storage and custody, and that's its own sort of realm. If it's more on the price side, you've talked about sort of having leaps a year out or so out of the money. How far out of the money do you usually go? Is there rule of thumb that you're using to figure out what the out of money is? A certain delta range? How do you think about that?
Yeah, again, like for me, you got to look at what your use case is. My use case was like hedging against a crazy like God candle event, right? So for that, it's like as far out the money as possible. So when I bought it, like I bought pretty far out, and like my IBIT leaps were also consistently the furthest out of the money possible. And then eventually they came out with a strike higher than that. So I just bought the strike higher than that, but I didn't roll the contracts or anything. So what I'm saying is like, my use case for it is just as insurance. So I wanted out the money for that maximum convexity, and I'm willing to pay the time decay. I also think that, in many ways, I don't even need like a true God candle event for this thing to profit. Like all my calls are actually, green from when I bought them, even though they're still not in the money. So like you have like that dynamic. You have to like figure out what exactly you want to do with them. But right, there's also a way to play options where you're looking for like maybe cheaper exposure to the stock for various reasons. And I can give you an example for that. Like, let's say you want to sell covered calls on MicroStrategy, but you don't have enough for 100 shares of MicroStrategy, but you really want to do the covered calls. Okay, very well. What you can do is you can like buy an option contract that is like just slightly in the money, or like near the money, or at the money even, and then just sell like what are called poor man's covered calls on top of that. Right. So if you have a contract that expires in 2 years, at the money price, so about like $390 strike price right now, you can now sell the call options that expire in 7 days, for like a strike of 500, right? And you can generate that yield, and that yield will come with a much higher theta than the theta on, say, the leaps, because they're leaps, they have much more time. The theta is much lower. When you sell, you can basically do that kind of duration arbitrage where you're selling the higher theta thing and then like buying the lower theta thing and earning that difference over time. So that's another function that you can do. Right? The point with options is that you can do so many different things with them, and it all depends on like.
No, very good for those who are looking, getting deeper into that. It's definitely an area of interest. I know for a lot of people on X, and just so much optionality. As you mentioned, it's a very liquid, deep market. Just to come back to some of what you said from an investment perspective, your risk profile in terms of looking at Bitcoin, if it's more from a price perspective, if you're going to own IBIT or you're going to own MicroStrategy, and thinking about the mix from how much additional risk, although I think the risk, I feel like, is going down, harder to price, because it feels like MicroStrategy has less of a risk over time, with the way in which the debt is structured, but something to monitor, I guess, as we move forward. Okay. Well, Allard, it was a pleasure meeting with you. I'm glad we were able to bring you on, and I very much look forward to having you back. At some point, we'll bring you back, talk a little bit more about the MicroStrategy, how it's playing out, and then maybe talk about some digital assets and the rest of Bitcoin, how it's going.
Yeah, look, great being here. I enjoyed this conversation. Thanks for having me.
Absolutely. All right. You take care.